Hello everyone and welcome to your Glassnode video report for week 47, 2022. So what we're looking at today is a little bit of fear that has crept in amongst the whales and the hodlers in particular. Now what we're really looking at here is kind of the fallout from the FTX disaster. And what we're trying to assess is the very early data. Obviously, data takes time to actually come in. Humans need to respond, things need to change. And what we initially get is that first impulse. What's the first reaction? So we really would expect during an event like this, and given prices have traded down to about 15,500 this morning, what we see is there's this initial burst of fear. And what we're going to assess is kind of what that burst really looks like now that we've got about a week and a bit of data following the event. And then also, what are the things to pay attention to as we roll this clock forward to see what could happen next and what are the trends to pay attention to. So as I mentioned, what we're looking at here is the FTX fallout. Now that we've got about a week and a bit of data, what has the initial response been? Now, it is quite an interesting market when we look at the on-chain data. What we've seen is the largest outflow of BTC from exchanges in history. So we are seeing the largest 30-day decline of exchange balances that we've ever seen. And it really goes to show that there's this move towards self-custody. Withdrawal transaction volumes are up. There's all sorts of things that are saying people are taking coins back into their own custody. Now, within that context, there's somebody who's always sending coins into those exchanges. And what we're starting to see is that whales are starting to actually dominate that inflow volume across pretty much all other cohorts. We're seeing net outflows as we explored last week. But what we're seeing this week is that whales are actually the primary ones who are depositing. We're talking about those with 1,000 BTC or more. Now, what we've also seen is that realized losses have actually peaked above $4.3 billion this week on a single day, which, I mean, this thing looks like a major capitulation style event. And again, we've seen many of these things and we're going to really explore the character of it. And what we have seen is spending of older coins at a much higher rate than we've seen certainly over recent months. And again, what we really want to assess here is a couple of tools to say, well, this is the event as it's played out so far. But what we also want to see is identifying what metrics to pay attention to and what dashboards we can have a look at to actually answer the question of, is this a sustained trend or is it just an event? Because if it's an event, it falls into the category of expected behavior. A very, very nasty thing like FTX happens. You would almost expect there to be this short-term reaction. What we really don't necessarily want to see is this develop into a long-standing trend. So really exploring some of those elements, and let's get started. So as I mentioned in the intro, here we are in our week on chain 47 dashboard, and price has fallen down to a low of about 15,500 this morning. So we really are, I mean, we are not even testing the lows. We broke down below the lows. Price is struggling. And what we really want to explore here is what's going on, what are the dynamics that are in play, and what can we draw from the data. Now, just before we do get started, this is actually really exciting news. I'm really glad to see this go live. Pretty much for the rest of the week through to the 29th of November, we have 40% off all advanced plans. Now, this includes monthly and yearly. I'm really excited about this because it lines up. We've just released a whole suite of new dashboards to answer some of the burning questions in this space. Everything from exchanges to spending volumes to old, what old coins are doing, what young coins are doing, all sorts of things. So really, these dashboards have been designed for the advanced plan. So I'm really excited to have this live. Do let me know if you have any questions or comments. More than happy to answer those. But, stay tuned for this because I think it's this is going till the 29th of November. We're really excited to roll this out. This is our first ever discount plan. So hopefully we see more of you on the Glassnode platform. So let's get started. And what we're going to start with is, this fascinating thing of exchange flows. Now, what we're looking at here is the exchange net position change. Now, this is a type of metric that we use all the time in Glassnode. It's basically when you hear net position change, it means 30-day change or monthly delta, right? How much has the exchange balance changed of all exchanges? How much has it gone up or down over the last 30 days? And as you can see, this is about, I think, 170,000 BTC in a single month. Now, that doesn't mean 170,000 BTC left exchanges. It means that if we look at over the last 30 days, on net, 170,000 has flowed out. So there's been coins going in. There's also coins going out. But when you actually net those out, there's 170 that have come out overall. So that means that there's actually been more that have come out because it's offset every single coin that has flowed in. So you can see the scale of this thing. It really does show how much the FTX debacle really scared everybody and got that self-custody bandwagon moving, which overall I believe is a very, very healthy side to the space. And the other thing that I'm quite aware of is that as more coins come off exchanges, the higher the signal the on-chain data will carry, because now when investors go and spend them, we're starting to look at when those coins were acquired into their wallets, and we can start watching them moving around again. So it's kind of removing a big chunk of that paper Bitcoin that we really saw grow up in 2021. Now, this metric here is called exchange transaction dominance. We've got three traces here. In the orange is all transaction count. And we can see that there's been a little bit of a pickup of late. Now, this kind of makes sense. During one of these events, you're going to get a little bit more attention going on. There's more transactions confirming. But what's quite interesting, let's zoom right in here. What we can see down the bottom is our exchange deposits in green, which you can see have actually descended below withdrawals in red, which are ticking up by a great margin. So you can see that exchange withdrawals, which account for about 30% of the total of all exchanges, have picked up quite significantly, whilst deposits are actually on the decline. So in terms of just sheer numbers, we are seeing less deposits, way more withdrawals. But remember, a withdrawal could be 0.001 BTC or 100 BTC or 1,000. So that's really the transaction count element. But what we're not looking at yet is the payload, how many coins are in those particular transactions. We'll look at that in just a moment. Now, what you can see is that the overall dominance, this is this gray curve in the background here. So deposits and withdrawals, this is called exchange related activity, currently accounts for about 48% of all transactions. Now, generally what we see is during bullish markets, we see uptrends, right? Sustained uptrends in this dominance, which is really showing that there's more activity. More people are depositing, more people are withdrawing, and you get a bit of a combination. This is economic activity as coins change hands. Now, periods when we also see this is during capitulation events. March 2020, we had this peak up and then it descended back down again and really plateaued for many months. So this is a metric we can pay attention to see whether this is just a burst of activity. Is it kind of the immediate shockwave event? Or does it actually continue up into a trend and tell us a bit more about it? If it dies off, probably signifies more of an event style behavior. If it really starts to pick up and trend, sometimes these big spikes in some major industry event is what it takes to actually turn markets into a different trend. That doesn't mean we're going back to all-time high, but it can change investor psychology. So one of those metrics to just pay attention to see whether that economic activity really picks back up. And on a very, very similar view, what we're looking at here is exchange volume momentum. So when we talk about momentum, we're looking at the monthly curve, which is in the red, and comparing it to the yearly curve. Now, what we're looking at here is the total amount of coin volume flowing in and out of exchanges. And very similar to that metric above, we're looking for that economic activity. Are we seeing coins changing hand? Does that mean that there's more interest, more people in the space? Essentially a thriving economy. Now, what we can see is that when this monthly breaks down below the yearly, it tends to stay there for several months, coincident with a bear market. When we get a sustained uptick, it tends to stick above there for some time and really only breaks down when that bear market re-enters. Now, we've had a few different attempts to try and get back above it, but really what we saw is there was never enough momentum to keep the train going. So we're pushing higher, but we haven't yet reached that yearly level. So this is one to really pay attention to. Do we get that significant uptick in overall momentum? You want to see it get above and then sustain it for any kind of positive momentum. As for right now, this is basically saying, sit tight, watch and see how this space plays out. We've got a bit of upside momentum, but as we've seen in previous events, over the last 12 months, they can fail and actually break back down. So one of those metrics to just pay attention to see whether we get a 2019 style break above that actually gains some positive momentum. So I mentioned in the intro that whales and hodlers are of the most interest at the moment. Now, what we're looking at here, we're going to focus on the whales at first, then we'll come back to the hodlers in a moment. So when we talk about whales, generally speaking, we're looking at we are obviously talking about large size transactions, but the way that this shows up is in the mean values. For anyone who's familiar with statistics, if we're looking at medians, they tend to represent the smaller entities. There's a lot more small size transactions than large ones in terms of their count. Conversely, when you have one very, very large whale, they can offset the mean quite significantly. So we've got a couple of metrics that we explore this with, but what we're looking at here is the average USD size of deposits into exchanges. So naturally, when there's more whales depositing or more very large institutions, we're going to see an uptick in all of these metrics. Now, each one of these traces for a different exchange. We've got Bitfinex in green, Gemini in purple, Binance is down here in yellow, Kraken's in red. So there's a few different traces there. But what I really want to highlight is note how all of these exchange metrics pick up during the capitulation bottom here in 2018. They all trend much higher. We see a lot more whale-dominated activity towards late-stage bear markets. And here we are, pretty much since Luna collapsed. That's really when this kind of phase of capitulation and deleveraging and all this psychological change has happened in the market. Note how our mean values have picked up substantially higher. So again, this isn't telling us that there is a bottom being put in. What this is telling us is that whales and larger entities are participating a whole lot more in exchange deposits. Now, this would be a factor of two things. One, a lot of what we're seeing in the market at the moment is being driven by these larger entities, very, very large deleveraging events. I mean, large trading firms. There's huge entities out there that are under an immense amount of stress, not just internally within this space, but also with traditional finance portfolios, right? Some people just have to sell what they need to in order to cover margin calls. So what we're seeing is that there's a lot more large scale activity. The other side is that we're kind of at a pretty late stage in this bear market, and retail has been pretty heavily flushed out. So we're essentially at the lowest level of retail participation at the same time as there's a lot of momentum going on with the larger firms. So what we're seeing here is a very similar market structure of increased whale/institutional dominance in the overall transaction flows. And just to really lock this in terms of the whales and exchanges side, this metric here, what we're looking at is the realized price of their withdrawals. Now, we're only looking at whales here, 1,000 BTC plus entities. The blue curve up here is mapping out what happened, what's their average withdrawal price since the March 2020 bottom. The red curve is since the 2018 bottom back in December. And the yellow curve is mapping all the way back to mid-2017 when Binance launched, because that's now grown to be the largest exchange and really dominates a huge portion of flow. So what I really want to highlight here is a few things. One, everyone from the 2018 and 2020 in the whale cohort is severely underwater. Their cost basis is between 29,000 and 23,500. So whales are under some serious stress. I mean, even the whales are heavily underwater at the moment. Now, until very, very recently, the yellow curve, which is the since Binance launched or mid-2017, every whale withdrawal that has happened since 2017, what's the average withdrawal price? Well, it's currently sitting at 17,800, which, as I'm sure you're all aware, we're currently trading below that. So even whales are currently underwater on their position. Long-term whales. Shows how nasty this bear has really been. It's serious stuff. So now the other one that I want to point to, you can see down here is our net flow, right? This black curve here. Now, it may not look very large. That's because the scale of this thing in terms of the actual volume of coins that whales are depositing is massive. But on net, whales are seeing about 5,000 to 7,000 BTC per day flowing into exchanges. Now, what I really want to highlight is that this is happening at a time when we're seeing the largest outflow of coins from exchanges in history. So this 5,000 to 7,000 excess coins that whales are depositing are being more than sucked out by literally everybody else. So it's a very, very interesting market. And again, it's kind of early data. We need to see how this plays out. As we discussed a couple of weeks back, we actually saw that whales were distributing the largest level that we've seen in history, again, back when we became that $19,000 stablecoin up there in October and September. So even when you have those whales distributing, that was actually a level that they didn't necessarily take that level out. So again, it all comes down to these net flows, and it's one that we have to just pay attention to. But certainly, almost every entity, with the exception of whales, is currently pulling coins off exchanges. Whales just seem to be the odd one out, which is a very interesting dynamic, and we'll see how that plays out moving forward. Now, just before we carry on, I did mention that we've got that cyber deal going on, which again is that 40% off. What I want to just take you through is very quickly a couple of these dashboards we've recently rolled out just to help you get started so you can kind of work out where you are in this flow. The first one is if you are brand new to Glassnode or you're looking for something just to trial out and see how the tools work, you'll find under tutorials, there is 1, 2, 3, 4, 5 of these different dashboards that are all designed to give you a very, very quick introduction, right? Showing you things like market tops and bottoms, on-chain activity, what's going with mining and supply. These are some of the biggest topics in the Bitcoin space. And we've got this other one here, which is the recommended T1 metrics. And these are very, very high level to understand how to get started. This one here is the SOPA metric. And we have seen, this is like a profit multiple. This is a capitulation candle we have not seen in a very, very long time. So you can really see how much profit or loss the market is locking in on any particular point in time. And we can see here our supply last active over 1 year. So these are really metrics to get you started if you are brand new to Glassnode, brand new to on-chain analysis, and you just want to explore the tools and see what's on offer. All of these have a video guide for you as well, so you can explore this in even more detail. Now, some of the cool metrics or dashboards we've recently rolled out for advanced plans. Almost all of these metrics that you see on the left-hand side here, almost all of these are pretty much entirely for advanced members. The only ones that are not is the engine room and our entity balance change. All of the other ones are really custom designed specifically for the advanced members. This one here, what we're looking at is different cohorts. So we're going from plankton to shrimp to crabs, and you can see how their numbers are swelling. This is looking at the amount of addresses that fall into these different categories. You can see their 30-day net position change down here in these oscillators, as well as the total count for these different cohorts. And as you can see, here's our whales. You can see that the whales have been net distributors. Their overall numbers are shrinking over the course of the last couple of months. So really trying to capture what's going on with different address cohorts. This is kind of the first building block for understanding what entities are doing overall. We also have our exchange dashboard. Now here's where I was talking about that our exchange balances is just falling off to multi-year lows. We're pretty much at a level where every single coin that's flowed in since the 2017 bull market top has essentially been sucked back out of exchanges. So a pretty remarkable thing to observe. We've also got per exchange, so Coinbase, Binance, Bitfinex, Kraken. We recently had to move FTX for obvious reasons. And what we can see here is the overall exchange balance for each of those, as well as their 30-day net position change. So you can see which particular exchanges are seeing inflows or outflows. Again, some dominance charts, overall volumes flowing in and out. And again, we can explore these all over coming videos. I just wanted to give you a bit of a flavor of what we have going on. Now, another one that we recently rolled out, and it actually pairs really nicely with the HODL wave dynamics. The way to think about these two dashboards, HODL wave dynamics is the unspent supply, and spending dynamics is the spent supply. So we're looking at how many coins are held by different cohorts, particularly around age buckets, and how much is spent by those different cohorts, really trying to combine those two elements. So what the spending dynamics is looking at is of the transfer volume, how much of it is going in and out of exchanges, what is the age of those coins. We're going to touch on this in just a second. This is our spent volume age bands. You can see here this uptick in these warmer colors down here. This is showing periods of older coins being spent. Now they tend to spend in bull markets in sustained trends, but also capitulation style events when even the strongest hands absolutely panic. This is the metric we're going to be paying attention to shortly to try and assess whether there's any kind of trend being established. Likewise, what we've broken down is into the young coin and the old coin supply. This is kind of analogous to our short-term and our long-term holder supply. And again, these are all available for advanced members. This one here is looking at how much of the old coin supply is being spent at the moment. And again, we'll come back on touching that in just a second. And really what these dashboards are designed to do is give you some tools within a contextualized framework alongside a whole series of guidance. So you actually understand what these things mean. What does up mean, down mean, left, right, red, green, trying to give you that insight so you can really put these to the test and answer the questions that you're looking for when you you see big moves in the market. You can come and try and explain them. Now, when we're looking at things like coin days destroyed and average coin dormancy, these ones here are looking at the average lifespan. How old are the coins that are actually being spent? And you can see this significant push higher, which again, we will touch on. By the way, all of our week on chain reports are pretty much drawn from these dashboards. We essentially built these because we use them ourselves. So you'll find that a lot of the tools that we're using in our week on chain analysis will actually be sourced from these dashboards because they're essentially built by myself and my team because we essentially use them ourselves. So it kind of gives you a bit of a gauge on why they exist. So anyway, let's get back into the action because we are actually going to touch on these particular dashboards momentarily. So you may have just seen this particular metric. This is the realized profit and loss. So what I mentioned before, we've got unspent and spent. Here, what we care about is what is the actual spending behavior. Now, as we break down to the 15,000s, right, which is pretty crazy if you wind back the clock 6 months, what we've seen is a major amount of realized loss. Now, this is on a 7-day exponential moving average. It's about $1.3 billion on that basis. On an individual daily basis, we saw $4.3 billion get wiped out from this space. So what that's measuring is people who bought their coins much higher are now spending them much lower, and that's realizing a loss. And considering we're seeing so many coins flowing in and out of exchanges, and it represents like 48% of the volume, for the most part, what we're actually seeing here are people flushing out and actually capitulating out their coins. Now, again, what we can see here is that these large scale events tend to follow some kind of consolidation. The market has to digest these massive moves. And as you can see, it's one of the largest that we've seen over recent history. Now, there is very, very little profit being realized. So what we're basically seeing is that almost every coin that's on the move is in loss. So it's pretty heavy stuff. This is the spent volume age bands that I mentioned before. And what we can really see here is that we've got an uptick in all of these older coins being spent. Now, what's particularly of interest, by the way, on any of these dashboards, there's a little magnifying glass up the top here that you can use to actually open up the full scale chart. And for this particular metric, we're really going to benefit from turning off and on the legend. So let me take you across to that and we'll have a look at that now. So this has taken us through to Glassnode Studios. This is the actual individual metric itself. If you open up one of these in Studio or in Workbench, you'll actually be able to see how these metrics are constructed. And what I'm going to do with this one here is turn off these yellow bands. Now, these ones here are basically looking at young coins, 1 hour, less than 1 day, less than 1 week, less than 1 month. And what I really care about here are coins that are about 3 months and older. Now, you can narrow this down even further and just look at 6 months plus. All of these are valid and there's different buckets you can look at, but really what I care about here is older coins, and over 1 month or 3 months is kind of sufficient to understand what's going on. And now what we can see, if we actually take this is the full history view, you can see that this recent spike is significant. About 4% of all of the transaction activity that's going on at the moment is being driven by these older coins. And you can see it is a very, very steep break from what we've seen through September and October, which were very, very quiet months. You can see the bull market of 2021 when you get these large peaks in these older coins being spent. It generally dies down during a bear. And here we are sitting right at the edge of a massive, massive, what looks like capitulation and arguably a loss of faith by at least some subset of the market. So we can see the actual scale of this thing. It really does stand out. It's pretty much the largest we've seen since July. We saw the same kind of profit taking going on. So trying to distinguish between profit taking and capitulation, this one here would be profit taking because you can compare it to the realized profit, which was peaking at this point in time. Likewise, back in January 2021. Down here in July, this was accompanied by a massive realized loss. Likewise with this one here. Has more of an air of a capitulation style event. But again, when we're seeing all of these old coins being spent, the ideal scenario is that this thing will cool off and actually V-shape all the way back down. That would show it's more of an event. It's people covering their margin, panicking out, whatever it is. What we really don't want to see is like this zone here. Through most of the bear market, this sustained period of old coins being spent, that would signify more of a loss of conviction, right? True bear market behavior. What we actually want to revisit is some of these much lower levels. This wants to be an event and then let it calm down. If we don't get that, probably not the best sign. If we do get that calming down, more of an event, more of a margin call type behavior. And that's why I'm saying we've kind of seen the initial shockwave. Let's see how this plays out over coming weeks. I mentioned before, we've got our old coin spent volume. These are greater than 6 months. Once you've held Bitcoin for more than 6 months, you've seen some chaos. You understand the mechanics and you're generally more experienced. Now, the curve here that we're looking at is a 7-day exponential moving average just to smooth out daily noise. You can see that we had a pretty significant spike, and it's one of the largest in the last couple of years. I think it's about the 5th largest during this 2021-22 cycle. but you can see it's coming down off the peak quite significantly. Let's actually zoom right in on this. You can see that we've had that initial burst driven really by one day over here where we saw 130,000 BTC older than 6 months getting spent, but it's cooling off quite a bit. So this is something that we really want to pay attention to. We want this to return back to this very, very quiet period, more of an event, less of a trend. If this starts to trend, again, not really the greatest sign, but we'll see how this plays out. Now, within that context, we've got our old supply net position change. So again, this is looking at a 30-day change in the supply. You can see the supply in the blue curve in the background here. Over 250,000 BTC that's older than 6 months have been spent over the course of this FTX chaos. So that's a pretty significant chunk. We're talking about 3% of the supply. And you can see here that the 30-day net position change is essentially the most negative that it's been since the bull market. So this is one of the largest expenditures of coins that we've seen coming out of the old coin supply. And we can then really confirm this. And what you'll see here is that these metrics tend to back each other up. They support each other by providing additional context and evidence. And what we're seeing here is average coin dormancy and the entity adjusted variant. The reason we're looking at both of these is that if a coin is on the move, what we can say is that if it's just an exchange reshuffling, it will still show up in our average coin dormancy. But when we look at the entity adjusted variant, it's going to smooth out some of that noise. So what we look for is, are both of these spiking at the same time? And the answer is yes, they both are peaking. We've seen the average coin dormancy pick up as well as entity adjusted. But note that entity adjusted is falling back off quite significantly. So a good chunk of what we've seen recently is actually internal. So yes, there's been some old coins on the move, but if you think about this, if we're seeing the largest exchange outflow in a very, very long time in history, there's a lot of exchanges that actually have to go and break into some of their cold wallets to service some of those. There's a lot of old positions that need to be remargined and coins moved around internally in order to service those mechanisms. So what we are seeing is that there's no question there has been a shakeup of the HODLer cohort. But it may not necessarily be a widespread loss of conviction. It's certainly there, but it's not yet Bitcoin's going to zero and everyone's lost faith. That's not what we're seeing yet. Again, if we see these things cool off, that would add more evidence to that case. If, on the other hand, we see continued and just an uptrend in all these old metrics, that would be evidence to the contrary of that, and less, more bearish on the longer term. Now, the last thing I want to touch on is kind of bring all of that home. I spoke about how we had about 256,000 BTC older than 6 months being spent. Now, what chunk of those is actually being driven by true investor capitulation? People who've had coins in their cold storage and they need to just exit. I've had enough, get me out of this thing. This is when we turn to our long-term holder supply to get a really, really precise view of what's going on. And what we can see is that this particular metric has pulled back by not 256,000, but by about 85,000 BTC. Now, 85,000 BTC is still non-trivial. It's a pretty significant amount. It's as if Luna just capitulated once again. However, note these declines back here. This is only looking at the last 1 year. This was about 101,000 BTC. This was about 130,000 BTC. This was 145,000 BTC. So compared to recent history, and again, this may not be done yet. We'll have to pay attention to this, but it looks like it's slowing down at the moment. What we've seen is it's not the largest capitulation event that we've seen. And the other thing to note is note this long uptrend that we've seen. We are pretty much, let me zoom all the way back out by 5 years. You can see that that little dip of 85,000 coins in the grand scheme of things is actually quite small. Now, the other thing I want to note is that this uptrend are coins maturing into long-term holder status, crossing that 5-month threshold. Now, for a coin to get there, right? There's 5 months ago, we were within this consolidation range, right? We've gone through much of the chaos, much of the capitulation pain. We're in the process where there's a lot of coins that were accumulated. We discussed this over recent videos. A lot of coins have been accumulated over the last 5 months. So the natural gravity is for this metric to push higher. So a constructive sign would be that this thing goes higher, because that means that the spending is no longer offsetting. The hodlers are no longer capitulating out, and it actually would signify that confidence is starting to return. If, on the other hand, this keeps trending down or trends sideways, that would not be so great. You can see that sideways here generally signifies continuation of the bear. sideways through here generally signifies continuation of the bear. So what we actually want to see is this thing start to revert towards its natural gravity, which is higher. And you can really track that by looking at those old coins being spent. That's essentially the crux of the matter. We want to see if old coins continue to be spent. That would be a negative sign. If they start to really slow down, that's probably giving us a bit more confidence, and maybe the hodlers aren't quite as shaken as they may seem. So thanks as everyone for tuning in. Hopefully you enjoyed that session. Please do remember that we've got our Cyber Week deal, which is going all the way through to November 29th. So till the back end of this week, it's 40% off all advanced plans. And really, we have designed these dashboards to give you as an advanced member the maximum edge that you can. As always, please ask me any questions if you have any queries. More than happy to help out, and I will see you in the next one. Cheers.